the uncomfortable truth for a lot of investors is that there's really nowhere easy to hide. If you look at all the traditional kind of low risk, risk-free assets, they're already very expensive. So the only value, the only kind of long-term prospective return to be had is in the risk assets at the moment, in equities, in high yield, in other risk assets. And that's a very uncomfortable position to be in for a lot of investors. It doesn't feel like this is a good time to be looking at that end of the risk spectrum, but that's the position we find ourselves in.
Yeah, you say that there's nowhere to hide, and just for those who are watching, at home or in their offices, I mean, here's the thing, right? When you see massive moves like this, unless you absolutely have to sell, unless you're forced to sell, unless you've got a margin call, the best thing you can do, Bill, am I not wrong, is basically to either, if you're lucky and you've got some dry powder, is to start nibbling, buying the things that you've been waiting to buy, good quality assets for the long term, or just riding it out?
Yeah, look, I think we would agree with you. It's very difficult to see exactly how this thing is going to progress over the relatively short term, say for the next quarter or so. It's going to be very, very difficult to call that turning point. So I think you have to look out longer. You have to say, are there assets around, are there equities around with a long-term story attached to them, a long-term growth story attached to them, where you can put the short-term to one side and say, look, the baby's getting thrown out with the bathwater. And I think if you can identify those kinds of opportunities, then if you see them getting sold off with everything else indiscriminately, as tends to happen on these big moves, then those are the things I think that you can nibble at, as you put it. But I'm not sure one would need to be in a very huge hurry to do that. I suspect we're going to be living through a period of quite considerable volatility over the next while. So, yeah, it's difficult.
I do wonder if part of the concern is that this whole paradigm of don't worry, let's lean on the central banks when things get so bad is starting to break down, because we've already seen the emergency cut from the Fed, and that didn't reassure the markets.
Yeah, look, obviously there's been a lot of commentary, a lot of criticism, basically saying monetary policy can't cure these ills. It's not going to address the underlying problems. And that may be true, but there are going to be, it's still hugely beneficial to corporates, to the real money sector, to the financial sector, to have a central bank or central banks around the world that are going on to a very accommodative stance. It's got to help. So it's not going to be a silver bullet that cures the problem, but as part of a package of measures, I think it's extremely helpful.
Okay.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.